Hi everyone, welcome from Accounting. Today's video is about e-commerce accounting requirement. If you are trading online, selling products even directly from your website through Amazon, eBay, or you using a drop shipping kind of platform like a Shopify, it's very important. You must, watch this video till end, where I'm going to share 5 key facts about your accounting requirements for e-commerce business. So I'll just give you some bullet points, what these 5 factors will be. And then at the later in the video, I will explain you how you can tackle them and how you can deal with all these things. So number 1 is setting up a limited company or trade as a sole trader. Number 2 is a VAT consideration. Number 3 is bookkeeping. Number 4 is preparation of your financial statement. And the number 5, the last one, is your self-assessment tax return. So what I'll do is I'll go into the details about all these 5 points which I've just mentioned. If you are trading online and if you are in the business of e-commerce and you're selling your products or services through online platform, you need to understand it's very important you have your proper structure in place, because what we have seen as an accountants, people at later stage having difficulties and problems regarding their accounts and finances. And recently we have seen a rise in tax inquiries for some of our clients because the way they were doing the accounting for the e-commerce business was incorrect, and some of them had wrong advice because they just listening to their friends and families. I've done that and you do that as well. These methodology doesn't work in when you do all these accounts and finance things. So I'll go into the detail. The number 1 which I've mentioned is setting up a limited company or stay as a sole trader. So when you decided to do a trade, you need to look into the consideration. I want to have a limited company for my business, or I just wanted to stay as a sole trader. Some people stay as a sole trader because they get a personal allowance, which is nowadays 12,750, and people think they don't have to pay tax on this allowance. Once their income is more than that, they will pay tax. But being a limited company, doesn't matter how much you earn, even if it's £1,000, you still have to pay tax. But at a longer run, you need to see and analyze what legal entity you wanted to do, because at later stage, it could be a hassle to changing from sole trader to a limited company. So it's always a better idea. You review your business model before making any decision and seek a professional advice. For us, if somebody asks us as at Acumen Accounting, we always recommend them to go towards the limited company route, because you have your name protected and you don't have to do hassle in future if you wanted to change. Number 2 point is a VAT consideration. It is a very, very important point. You all need to listen that very carefully. What happens is when you are trading in e-commerce, some people just not going to register for VAT, even though they're below the threshold. The threshold is £85,000 in 2021. So if your turnover is below the £85,000, of course, you don't have to register this. There's no requirement because your sales or your turnover is below the threshold. But what happens is when you buying your products, and because you need to buy it and sell it. So when you're buying your products, what happens is there is a VAT which you are paying, and it's good in accounting treatment wise. You have to register from day 1. So if your turnover is below £85,000, you can still register as a voluntarily from your company, and then you can start claiming all the VAT you are paying at the start. It helps you with the cash flow, but again, it helps you with all the figures you wanted to do. But what we can do is, if any of you wanted to have that spreadsheet which we have prepared, anyways, we don't charge for that spreadsheet. It gives you the quick calculations. You can put your figures in, how much you are buying for, how much you're selling it, is quickly do the calculations and give you some rough estimate how much savings you're going to have if you're a VAT register or if you not a VAT registered. VAT is a very large area. It's not very simple. It's a complicated. People think it's very straightforward, claiming VAT and then paying VAT and that's it. They're doing your returns. But I'm not going to say we are kind of a Superman accounting firm, but we have seen people coming to us, their previous financial advisor or whoever they're using it, or they're doing it themselves. They made massive errors and misjudgments on declaring their sales. Sometimes you're selling your products out of the UK. Again, it's out of the scope, but you still have to report it in your tax return. And some people have not done that, and now they are in kind of a financial problem because HMRC have reviewed their accounts, HMRC reviewed their VAT returns. Now they are in the position where they're going to pay penalties and the fines, because you as a director, you as the owner of your company, you are responsible for your finances, your tax returns, your VAT returns. We have said that number of times. It doesn't matter which accountants or whoever you use, but it's your responsibility to make sure your numbers are correct. Of course, you need to pick up accounting firm which you trust and can give you a better advice. So VAT is a very large kind of area, so that's where you need expert advice. If you have any question, query regarding your e-commerce VAT, either leave a comment at the bottom of this video, or you can send us a private message. Either myself or one of our team member will definitely help you in that regard. Come to the third point, which is bookkeeping. Bookkeeping, I always believe whatever you input into your software or computer system, that's very important. It's very, very important. The information you putting into your software is correct, because if you're not doing your bookkeeping correctly, your account is going to be incorrect. So bookkeeping is a very important element. And sometimes it's a burden for the entrepreneur or the business person who was doing it. It's sometimes a big job for the business people. So again, we recommend just outsource your bookkeeping work, let the accountants deal with it. And then you can just concentrate on your business and your inventories or whatever you're doing online, because that's one of the key factors where they could, you're probably thinking about saving some money, but in a longer term, when you look at it, you're probably seeing, look, this time I could have spent on my business and grow the business rather than just, doing this number crunching, sitting at home. So just outsource your bookkeeping. It's very easy. It's not very expensive nowadays. Number 4 is a financial statement, preparation of your financial statement. It's, if you have a limited company, the financial statement need to be done according to the international reporting standards. So again, people sometimes mixed with the bookkeeping and financial statement. Again, your accounts, if it's a limited company, it need to be done according to the company's house requirement. If they're not done properly, again, your accounts could be rejected when you submit. So for that reason, again, you need somebody professional to deal with it. Your financial statement need to be accurate. This give you all the information that, as a business person, you can see how your company is doing, all your income and expenses in there. You can see your balance sheet, the accounts receivable, accounts payable, all these information will be in your financial statement. But whoever you are using as your accountants, make sure you sit with them when the financial statement is ready and read your financial statement. Ask them to explain you. We do that on a very normal basis. We explain to all of our clients, this is your financial statement. What's that? Because you need to tell the business person so they understand the basics of the financial statement. The last one is a personal self-assessment tax return. You have to file that if you are trading as a sole trader anyways. But if you are not even a sole trader, you are just a director of the company, you still have to file your self-assessment tax return. The reason is because you are a director of the company or the shareholder, you're taking a dividend income that need to be declared into your self-assessment tax return. Sometimes it's very simple to do the return, but now it's getting complicated. Unfortunately, UK accounting system, I would say the tax system is not very easy. It's complicated. Basically, mostly it's been advertised. It's easy to access, but the tax system is very complicated. It's not straightforward. So always seek a professional advice for any tax matters you have. And make sure you're declaring everything in your self-assessment tax return, because at a later stage, you will be the person who will probably get in trouble. Anything you wanted to ask, just comment at the bottom of this video, or one of our team member will definitely get back to you. These were the 5 points you need to consider if you're trading in the e-commerce business. But if you have any specific questions, and if you think we haven't covered anything in this video, you can always get back to us. We are very open, and we don't charge talking to people. And again, share this video with your friends who are in the e-commerce business. That probably help them all these tips which we have just mentioned in this video. Again, thank you for listening us. Stay safe, stay healthy. Bye for now.